What's up guys, welcome back to another video. In this video I'm gonna discuss what is an inversion fair value gap, IFVG, how do you spot them on the chart, what to look for, and how do I trade them so you can get the best IFVG setups. So an inverse fair value gap is basically a fair value gap that got disrespected and broken. So the market direction switched from bearish to bullish or from bullish to bearish. So for example, here we were doing higher highs and higher lows, and then we had a peak here and probably an SMT as well, I'm not sure. And the price started reversing. We had here a fair value gap that was bullish, and the market respected that fair value gap for a short amount of time before it coming back down and inversing it. And the candle that inversed and gave us the confirmation that this is an inverse fair value gap or an IFVG is this candle right here. Um, and this candle right here, it gave us the confirmation that this is indeed a reversal point of the market, and the price or the market wants to trade lower and lower. So this is basically an IFVG. When it was here, this was a IFVG. It was IFVG, it was bullish, and everyone was happy. When the price respected that and then it came back to disrespected and broke the IFVG, the IFVG with that candle, it became an inversion fair value gap or inversed fair value gap. So that is what a fair value gap is. When it was bullish here and it got broken, now this area, you can look into it to be a reversal point or a resistance area for the market to keep going down. So I'm going to change the color here from green to red, indicating the market wants to trade down or lower, making lower highs and lower lows. So that is simply what an IFVG is. Now, how do I look for the best trade setup, and which IFVG setups do I actually take? So basically, the checklist that I look for before entering a trade is, first of all, I need to see some sort of important liquidity sweep that I need that the market takes before going and reversing to the other direction. So if we see here this day, if I can go back and do a bar replay, so I can go back to this day and do a bar replay really quick. And what happened here is, so I go to the 5 minutes to look for important liquidity sweep area that I am expecting the price to reject off of. And I can see here that we have a lot of high liquidity pools in here. And we also had market open in here. So that is two areas that I'm expecting the price to reject from or potentially reverse. So I mark these two areas, and then I go to the 1 minute. When you go to the 1 minute, I need to see this sweep first. So the market goes up. When it's going up, while it's going up, it's leaving bearish, it's leaving bullish imbalances and bullish fair value gaps. So I can remove this first. Um, I have here a bullish imbalance or a bullish fair value gap, and I'm expecting the price to, as it did, come back, retrace, respect it, and go higher. So that's what it did. It went higher, it made a new high, made a higher high, and then it came down and is still respecting it. So the price, now it is disrespecting it. That does not mean that I can go ahead and jump in into a short position. I don't like to trade like that. I wait for I wait for this bullish fair value gap to be broken as well, since we have two fair value gap in this one leg. If I have one singular fair value gap in this one leg, I would have considered taking a short position after breaking the first one. But since we have two fair value gaps in this one leg, I need both of them to be broken. So this fair value gap, let's see what the price will do, if it's respecting it or disrespecting it. And as you can see, we're respecting it. We inverse this bearish fair value gap, indicating that we're going higher. That does not mean that we're gonna go higher and make a new high or anything, because we are at a key reversal point that potentially might send the price lower and lower. So here we do have a bullish fair value gap, the price respected, and we are going up and up now, and the price make another swing high now. Now the price is rejecting from this rejection block, and it's sending the price lower and lower. So I am waiting and watching the price carefully and what it does. Now we leave a bearish fair value gap in here that we come back to it, respect it, and send the price lower. I'm still not executing any trades yet until we break this bullish fair value gap. And we're still making bearish imbalances, and we're delivering from it and sending the price lower. So with this candle right here, we got confirmation that the price wants to go indeed lower. It is a little bit late. The move already started a little, but that's fine. That's that is how you make sure to not get into a lot of losing setups, and you make sure to take the good setups. So I can enter directly from here since the price broke that bullish imbalance and fair value gap, and my stop in this case can go on this high or this high, since we already traded into this bearish fair value gap and we're not moving any higher than that. I usually like to target $30 as a fixed TP for myself, just because I'm still a beginner. If you have advanced experience in the market and you can go for the opposing liquidity or the equal lows and equal highs are usually a really good target for TP. And as you can see, the price goes up, reject from this bearish fair value gap, and also retest of this bullish fair value gap that was broken into, and now it is in IFVG that will send the price down. So that price, when we break the fair value gap, the bullish one, and we trade through it, we most of the time, I'm not gonna say all the time, most of the time we'll come back to retest from the opening of it, or most likely the 50% of it, the CE of the IFVG, and we'll send the price down. So as you can see, we keep moving down and down, leaving bearish imbalances, filling it as we move toward the draw on liquidity, and eventually we'll hit the opposing side liquidity, as you can see, having 3.355 Rs. But for myself, because I'm still a beginner, I like to be targeting $30 price action, because I don't want the price to keep going all this price action, all these points, for it to reverse on me, and I'm still not the best to predict the market. When is it gonna reverse? When I'm in a trade, I'm still working on that, because when I'm in a trade, I have a bad habit of just keep looking at the dollar of the trade, and I get carried away by the dollar amount and forget about the market direction and what is it doing in the meanwhile. So this is how I trade the inversion fair value gap setup. I can show you one final example of how I use it before we finish the video. But before we go to the next example, I want to let you know that I have a favorite signature and price that I really like when trading the inverse fair value gap strategy. If you guys want to see that, make sure you guys subscribe to the channel, like this video, and let me know down in the comments below if you want to see my favorite setups of the inversion fair value gap, and what is my A+ setups that I like to take with the inversion fair value gap, because obviously not all of them works and not all of them fails. So if you guys want to see my favorite IFVG setups that I love to take, that signature and price, make sure to like the video. Let me know down in the comments below, and make sure you subscribe to the channel. So actually the second example that I'm going to show you happened on April 2nd, which is very recent. So I'll show you the trade setup for the inversion fair value gap using this price action. Starting off here, the April 2nd, we kept dumping down and coming into the silver bullet time, which is my time. It is 9 to 11 and I am on Chicago time, but it is actually the same thing as 10 to 11 New York time. So I'm gonna go ahead and go and look on the big time frame, 15 minutes or the 5 minutes, to look for a liquidity pool or equal highs, equal lows, to look for any reversal point that the market might reverse from. So on here, it looks like we did a pretty nasty sell model, sell curve, market maker sell model here, and we're coming to kind of like original consolidation into this area. So I had actually these lows marked. I was on the 1 minute waiting for the price to sweep this liquidity first. So as you can see, moving down, leaving bearish imbalances, bearish fair value gaps. So playing the price here, we went down and rejected, and then we went up. We're still waiting. I'm still waiting. I'm not doing anything. So although I did inverse this fair value gap, this bearish one, I'm still looking and monitoring my point of interest that I like to take these key points of reversal from. So I'm waiting until this gets swept first. We make another engineered liquidity, another pretty good solid candle here. We make a large wick that we need to sweep this before going up or moving any higher. So I was on the 1 minute. I saw that we did sweep, and now after we did sweep this, looking and watching this key level that I got from the left, which is a pretty important low liquidity and liquidity pool, low liquidity pool on the left. After we sweep it, I want to see kind of like a green candle or kind of a rejection candle to show me that, hey, we might be looking to move to the other direction or reverse from this point. So as you can see, I'm keep dumping down, dumping down, and that is totally fine. So we keep moving down, and now I see this kind of like, it looks like a rejection candle, and then I see two green candles. So I like to go to the 30 seconds chart. As you can see here, we were respecting all these bearish imbalances, going down and down and down. So if this is a really true key level for me to reverse and switch the market direction, then I need to see one or two things: to trade through a bearish fair value gap, or show me a really good momentum candle and I show the price that it is wanting to go higher. So as you can see here, we had a bearish fair value gap that we respected and went lower to sweep again another liquidity. So we had 1, 2 important liquidities, 3 sweeps. We had 3 liquidity sweeps, and then the price lift a fair value gap here that was bearish, leaving this bearish fair value gap. And then it showed me two things. It showed me that, hey, I inversed this fair value gap, that bearish fair value gap, and now I'm ready to move higher. And it also gave me a momentum candle. I can easily take a trade from here, and I'm not going to be scared from this bearish fair value gap because I respected it once. Why am I coming back to it with a very large momentum candle? That means the price wants to go and move higher and higher, or at least, even if you're wrong. And that's what I really like about this strategy, and that's the way that I like to trade it. At least, even if I'm wrong about the direction or anything, at least I need to retrace to the 50% or the equilibrium of the day, the daily range of that day. So either so even if you're right or wrong about your trade, this is a really good way that I really like to trade it, because even if I caught on the wrong side of the bias that day, and trading a really good important liquidity levels that I am watching and looking for a reversal from, I should be fine even taking a retracement trade, and I'm pretty sure I will still hit my TP. So my TP, as usual, $30 is my TP, whether or not it is a 122 or 1.25 or whatever. My stop loss either can go below this rejection block or below these lows, just to be sure. But because a lot of time the price might come down and reject one last time from a rejection block before going to your favor. So, but in this case, because I see a momentum candle, and this is one of my favorite trade setups that I like to be taking, we already respected this bearish, we already respected this bearish fair value gap. We went down, we swept, we're going up to it with a very large momentum candle. I am ready to take my trade. So 122 here, and we're gonna let the price play, and you get to TP very quickly. Other people, if you're more advanced and know the market direction, and you have a lot of conviction in your buys for that day, you can target opposing liquidity and just let the market do the heavy work for you. It's gonna retrace and do a lot of stuff. For me, I have a very weak psychology, and I don't really like to be sitting in a trade, going up and down, going up and down, and being scared that the market will take me out before going to my TP. That's why I target a fixed TP. It's up to you whether or not you want a fixed TP, or you want to target opposing liquidity, you want to target higher, you want to target consolidation. It's really up to you and your trading style, your trading plan. I'm not sure if the price will reverse on you halfway or not. It depends on whatever TP you're looking for, or how much you want to risk. It all depends on you and your risk management, your trading plan, all of that. But I like to be taking my $30 fixed price, fixed TP, um, just so I can take my TP in the first expansion of the price leg. And that is all for today's video, guys. If you like the video, please make sure to like and subscribe, because that does really help the channel and does help me grow. If you want to support me through something I like, and produce content for you and educational videos for you, that would help me out a lot, guys. See you guys in the next video.